it's your boy Felix, and welcome to a new series on this channel. And on this series, I will be analyzing 5 interesting and amazing cryptocurrencies that I feel might make you guys a lot of money. So if you like what you watch, don't forget to like, subscribe, and comment. See you guys in the chat.
The first thing to do is to go to the highest time frame in order to see the overall direction of the market. If the market is making higher highs, higher lows, then it's an uptrend. If the market is making lower lows, lower high, it's a downtrend. If the market is moving the range, it's in a ranging market. So in this case, the market has been making higher highs, higher lows since 2020. You can see it down here. You can see the rise in the market. So this is a high, this is a low, this is a high, a low, high, and a low. So the market has been on an uptrend. And you know what? So if the market planned on moving from point A to point B, what comes next is a 5-wave pattern. If it's an uptrend, it's a 5-wave pattern using the principle of the Elliott wave. So if this is an uptrend, for example, what comes next? There are 2 possibilities of what comes next. You could get a retracement or you could get a reversal. So a retracement will be just a short pause in the market, which is a 3-wave pattern, A, B, C, and then what comes next is a continuation. This is a retracement. Vice versa for a reversal. A reversal will lead to a change of a direction, to lead to the formation of a new direction. And it's usually a 5-wave pattern. So it's when there's a change of trend. So in this case, you have a previous trend was an upward trend. If we had a reversal that comes next, what you will see will be a downtrend, a 5-wave, in a 5-wave pattern. So a reversal will be a downtrend that will also lead to the break of this structure. A retracement is a 3-wave pattern, A, B, C. The A wave could either be a 5-wave pattern or a 3-wave pattern. Could either be a 5-wave pattern or a 3-wave pattern. The B wave is always a 3-wave pattern, and the C wave is always a 5-wave pattern. This is the monthly time frame. Although you can't really see the fractals properly, but you can just use an idea to know what's happening. So this is the monthly time frame. You can't really see the structure of the pattern properly, but I always tell my student or whoever I'm teaching to try to get the shape on the highest time frame before going down to the lower time frame, because it's much easier for you. All you have to do is just to scale into the required wave you want. So in this case, I can see that the market made a high down here and it stalled around this region. You can see down here. So I will label it as my first wave. This is my first wave. This is my second wave. So it retested this area of this EMA line. I think it's the 50 EMA line, because it's like a mid-term EMA line. So I usually have on my chart, I usually have the short-term EMA, the mid-term EMA, and the long-term EMA. But I don't really make use of the EMA on its own. I usually use it with other confluences. The EMA acts as an area of, as a dynamic area of support and resistance, and you can see the retest around this EMA around there, and also around this region. So I could just get my drain tool and see this is the first wave, the second, the third, the fourth, and the fifth wave. If I just go down to a lower time frame, I'll be able to draw it properly. Go down to the weekly time frame. You can see, so this is the first wave, the third wave, the fourth wave, and this is the fifth wave. So I told you, after a trend, what comes next is either a retracement or a reversal. So from this, I could, by just looking at the structure, I could see that the market experienced a bearish move. It stood around this area, a continuation down here where it stood, a continuation down here where it stood, and a retracement and a continuation. So I can see this is the first wave, second wave, third wave, fourth wave, and the fifth wave. If this was a retracement, you can have this deep pullback. But this is a very deep pullback. You can see the whole structure. It's almost like 50% of this whole structure. Should get my retracement tool. See, it's more than 50% of this whole structure. You can see down here. And let's say, for example, if we make this a retracement, so what to expect is it's A, B, and C. In this case, it is impossible because a retracement doesn't lead to a break of structure. So you can see this will break the structure. Instead, a retracement is just a short pause in the market and the resumption of the trend of the previous trend. So this was an uptrend. This is meant to be a short pause in the market, and the market is meant to be in a continuation where it will lead to break of this structure down here. This structure. But instead, what we could see as a very deep pullback, and not only that, this is a 5-wave pattern. This is the 5-wave pattern, which is the A wave, which to me, I feel this is a reversal because this pullback is too deep to be the A of a retracement. Instead, it's meant to at least something like this, meant to experience something like as short as A, B, C, and then a continuation to this level. But that's not the case. So what I'm going to do, I'm going to treat this market as a reversal instead of a retracement because of the signs I'm seeing in the market, because of what the market is showing me. So, and a reversal is, this is the first wave part. This is the first wave, the second wave, third, fourth, and fifth. Since we're on a weekly time frame, we don't really care much about this. Our main focus is on this first wave. So to change the color to this color. So this is the 5-wave pattern. What comes next is this second wave, which is an ABC pattern, which is a retracement, which is an ABC pattern. But that will occur if we are sure that this fifth wave here, this minor fifth wave here has ended. Like I said, this 5-wave is a motive wave, so it's going to be a 5-wave pattern. But to expect a 5-wave pattern, I can't really see much information down here, but I have to go down to the lower time frame to know what's happening down here. So go down to the daily time frame with my focus on the 5th wave. This is the minor 5th wave. So I could clearly see that There was a bearish move down here, a retracement which gave the second wave, a deep move down here which was the third wave, a retracement which is the fourth wave, and this is the fifth wave. So what came next was, at the end of this minor fifth wave, we are to be in the corrective second wave, which is this. So this is where we are. We're on a corrective second wave, which is an ABC pattern. This is an ABC pattern. So right now, you can see the market is in the bearish wave right now. On the first wave, we've completed the first wave. This is the first wave, second, third, fourth, fifth, and what comes next is a corrective second wave, which we are currently right now. And you can see in this minor fifth wave, it had a 5-wave structure since it's a motive wave, and the market has already like tested the structure. So there's like almost like a break of structure right now happening down here. So it's safe to say that we are in a corrective second wave right now, because this minor fifth wave has a completed 5-wave pattern. So right now we're in a corrective wave, and a corrective wave, I expect this wave to correct up to about 50% of this whole structure. So if I get my Fibonacci retracement tool, I can just mark an area of 50%. So around this region, we expect the correction to happen. And I will just look for an area of resistance or a critical area around this region. So around this, from 0.7, 0.6, and 0.5 Fibonacci retracement are my area of interest. So what I usually do is I look for area of resistance or support or critical areas in this region, or areas where the price experienced some form of resistance or support or a consolidation. And I could see that down here at this level down here, there's like a resistance down here and also a resistance down here. So I can just put an area of resistance in between this place down here. So I expect the corrective wave to be about this area to get a form of rejection around this region. So I should delete this. So to get a rejection around this region, this is where I expect it to get a rejection. So I know the corrective wave, second wave is an ABC pattern. So I'm thinking maybe probably this could be the A wave, the B wave, and the C wave. Get this down here. So this is A, B, C. I can't really see the structure of the candlestick, so I have to go down to the lower time frame, which is the daily time frame, to get a better understanding and see a clearer picture of the candlestick. So to the daily time frame. The 5-wave pattern. So this is the first wave down here. This is the first wave, second wave, third, fourth, and the fifth wave. So meaning we're done with the first A wave. A wave is already completed. What we're dealing right now is the corrective B wave. At the end of this corrective B wave, which is always a 3-wave pattern, there will be a bullish move. So I'll be expecting to buy. To be on the safer side, I'll be taking a buy trade on the break of this structure, because I can just see that this is A, the B, and the C. Down here. So to refine my entry, I can say, okay, I can say the break of this structure, or even itself the break of this structure. I'll be looking for a buy. I'll be looking to take a buy trade on the break of this structure down here, and my target level will be. I'll go to the highest time, to the higher time frame, the weekly time frame. This is gonna be my target level at this level down here. This is my target level. So